Hi. How are you doing today? It's Thursday. Um, I guess by now we're so accustomed to saying where has the year gone? But here it is again. 2025 is almost on the close. So today's Thursday, touching base with you for a very quick one, very short one. Just need to know that today I will be focusing more on our business owners, business operators, because there are some very, very important stuff that we want to look at that pertains more particularly to business and business taxation. The plan of action is that today I will briefly introduce to you approximately 10 or so very, very important things to consider as we maximize our business benefits. But for the next 10 business days, what I will do is to take each one in turn and go into a little more detail so that if it's something that is applicable to your business, then you can get a better understanding as to how to go about to do what you need to do. So today we're introducing 10 or so very key elements to be considered. And then for the next 10 business days, we will be doing one per day, so to speak, by going a little more in depth on the matter. So without any hesitation, let's jump right in. We hear people talk about, everybody's been talking now about the what Trump, I found the name to be so interesting. What is referred to as the big, the one big beautiful bill. Very, very pretty name, I would say. But basically, this act really was passed in July of 2025, brought to light some very, very important stuff and gave longer life, so to speak, or even permanence in some instances to some of the benefits that, tax benefits for businesses. So quickly, the first thing I look at here is the bonus depreciation. As I said, we're going very quickly just to mention them on this session. So the bonus depreciation, as we know, we all are business people, we know about depreciation, so that when you buy your equipment, your furniture, etc., you're able to depreciate them and basically get a tax write-off on your tax returns. Normally, these things are written off over several years, but we now have the benefit of having a 100% bonus depreciation where the provision is there for you to expense, meaning that you can charge the full cost of these purchases on your current year P&L and in your current year tax returns. So it's called 100% bonus depreciation, which is something that businesses will want to take and take seriously. There are some nuances to it that you need to be aware of, but again, that is for when we deal with that in its own right. But just bear that in mind as one of the things that we need to consider as business persons. Next thing is the research and development credit. Research and development credit. That is a little fickle one because a number of small businesses, especially, although they qualify, they are very tentative in claiming those credits because yes, there are some criteria that are to an extent onerous and require quite a bit of record keeping and reporting, but there are things that can be done. And if you as a business owner, if you're entitled to that credit, then that's something that you do not really want to overlook or ignore because of fear of what are the qualifying requirements. More details on that as we go down into the weeks. The QBI, the qualified business income, is a deduction where you have a 20% of your qualified business income being, as it were, exempt from taxes. And this particularly benefits what we call pass-through entities like your sole proprietors, LLC people, your partnerships, your S corporations. So those entities are referred to as pass-through, which I know by now you're familiar with, where we're saying that the profit or losses generated by those entities are not taxed on the business itself, but they are passed through to the owners and taxed on the owner's personal individual tax returns. And that has some certain benefits to it. So this was expected to, as it were, sunset or to end this provision at the end of 2025. But not only has it been extended, but it has been made permanent. So going forward, we'll always have this 20% QBI, or qualified business income deduction, that will benefit what we call our pass-through entities. More details on it in the weeks to come, in the days to come, rather, in the days to come. So that's your QBI. We have what called the business interest limitations, and yes, most businesses, whether small or large, you have your loans, etc., that you take out to run your business, and so you pay your interest. And we know interest can be very onerous, and on a business cash flow. So there's what we call the business interest limitation, where there's some revision as to how much of this interest you can write off on your tax return, so that you get some relief from the cost of operating your business thing. Those are the things. Now we have what we call the Section 179 provision. This was always in place because it really refers to that section in the IRS tax code, Section 179, which basically states that any asset, whether equipment, vehicle, machinery, you name it, any asset that you put into operation for the first year of entry, so the first year that you introduce this equipment, this machinery, etc., into production or into operation, you are allowed almost, I would say, a lump sum deduction. So normally you would spread the cost over X number of years, but now we have what we always had a Section 179, which allows you to deduct in that first year a lump sum amount of that capital expenditure, and then you would depreciate the rest of it over time. Okay, so there's an expansion to this Section 179 provision. More information on that, but remember now, I'm just mentioning these very quickly because these are things that I want you to keep in mind, and to the extent that you qualify for those benefits, these are things that you definitely do not want to inadvertently overlook. And I say inadvertently because sometimes it's just due to lack of knowledge or information why we overlook these things. There's also the new qualified production property. Essentially, if you live in a structure, I'm going to call it a structure. You live in a structure, a house, a building, but you also conduct business in that building. Okay, there's what we call expensing of certain deductions because of that arrangement. I know for especially our sole proprietors, we are accustomed to doing what we call home office deduction. Slightly different thing, home office deduction, where we're saying if you operate an office at home, or if you run a business but the office or the central administration of that business is conducted at home, then you're able to benefit from a home office deduction. This, what I'm talking about, which is referred to as a new qualified production property, has to do with a little more than just that. Clean energy credit, big one, and that applies to both businesses that are installing all these energy efficient equipment, and also homes where you have your doors, your windows, solar panels, etc. Okay, so anything to do with energy conservation over a number of years now have been benefiting from credits, meaning that you're given an incentive to invest in those areas. Now, some of these benefits, some of these, as we say, clean energy incentives, there's going to be some rollback, meaning that a lot of them are coming to an end. As a matter of fact, if you, even on an individual basis, if you have undertaken expenditure rather into any of those energy conservation stuff in 2025, ensure to bring them to light so that you can claim them on your 2025 taxes when you do your tax next year, because some of them 2025 will be the final year for those benefits. Okay, just bear that in mind. More information on that as we go forward. I mentioned again earlier about the bonus depreciation, but when we talk about capital investment, okay, so because of those provisions, it makes sense as part of your tax planning to say to yourself, since I'm going to need some equipment going forward into 2026, maybe it is a good time for me to purchase these things before the close of 2025. Because if there are provisions that I can benefit from on my 2025 tax returns, then maybe I want to acquire these things in 2025. So I'm able to report them as part of my 2025 picture and get the benefit. Although the truth is that I'm going to be utilizing these things in 2026. That's all, again, part of what is provided for you and something you may wish to consider as a tax planning strategic move. Okay, so that is your capital investment. We mentioned about research and development before, and that is that. Now, a couple of things I also want to, and I made a jotting here on it. Let me just jump to it right away. So let me see. We talk about the bonus depreciation. We talk about the qualified property. That is where, you live in this building, but you operate from there. We talk about the clean energy incentives. Now, let me see. Okay, you may have heard, and maybe you even, involved in what we call opportunity zones. Quickly, opportunity zones for investment purpose are really some of those geographical locations which are underprivileged in terms of available resources, and so not much development goes on there. And because of the absence of economic development, then the citizenry do not benefit. Those neighborhoods do not benefit because there's not much economic activity that's going on. Part of the incentive that is given by the government is to say to businesses, if you are willing to go into those areas and to start some sort of economic activity so that the society, the economy of that city, or the citizenry will be able to benefit economically, then there are some incentives there for you. So that is the opportunity zone incentives. That was originally set to expire in 2026. But fortunately, and hippie hooray, this is now permanently extended. Okay, so you can always identify, and you can actually go online and research to see where are the opportunity zones in my city or in my state. Find them, decide if that's something that you want to consider going forward. But the bottom line is that the benefit for doing that, for taking that on, will not expire in 2026 anymore. It goes on into permanence. That's that. We mentioned about domestic and the research and development. Again, for business owners, now especially in the hospitality, restaurant industry, you name it, there's what we call overtime and tips. So there's no provision where there's a change, a revision into the taxability of these overtime and these tips, which is really to the benefit of the employees, but then it has implication to you, the employer, as to how it is to be handled going through from 2025 going through 2028. Another thing to be discussed that in more details. Let me see. We talk about the QBI. There's one other thing I want to mention here, and it's the what we call giving of gifts. Okay, giving of gifts. So the question is usually asked: if I give my son a gift of whatever, $10,000, a motor car, etc., what's the tax implication? Now, as we said, we do not talk about income tax for gifts because it's not income; it's a gift. But although it's not income tax, there may be some other type of tax to be considered. All right, so we have gift tax, but again, there are some rules that govern that, and so there are some gift exemption limits, meaning that yes, you make a gift, yes, it has some tax implication, but there is like threshold where beneath a certain amount, then you're exempted from whatever the tax implication. Again, we need to look at this because sometimes as part of your tax planning, come close to the end of the year, you say, maybe it's a good time for me to be making some gifts or for me to be making some charitable contributions or charitable donations as part of my giving and tax strategy going forward. Right. So that's about it for me for today because I just wanted to, as I said, sensitize us to some of the things that I wanted to bear in mind, keep in mind, so that you can hit them running once you wake up from your sleepiness of the a lot of revelry, a lot of eating and socializing, and 2026 is here. We want to turn our attention to our taxes, our individual and also our business taxes. And these are some of the things that is very important for you to keep in mind, bear in mind. So it's a reminder for the next 10 business days, I'll be taking each one of these that I mentioned today and going into a bit more depth so that you can understand the basic fundamentals. And if any or all are applicable to you, then you'd want to have the information to be able to take advantage. Some things are pretty easy for you to take on yourself. Some things may be a little more technical. You may need some expert advice and guidance. Etienne Business Solution is always here to guide you, as we always do and continue to do. So you will see our contact information coming across your screen in a minute. And so, have a wonderful Christmas. Mark, you will be seeing each other for several days to come as we go through the individual components. But even then, I'm still saying that looking forward for us all to have a wonderful holidays with our friends and family. That's it for me right now from David saying, I'll see you over the next 10 business days. Okay? Bye for now.